first, I would like to ask you about M-PESA, which is this mobile system of payment in Kenya. Can you tell us a little bit about what is M-PESA, and how?
Sure. It's a mobile money system in Kenya which allows you to use your cell phone as you would a debit card, except there's no banking infrastructure on the back end. So I can deposit money into a virtual wallet on my phone. I can transact that money with anybody by SMS. I can pay bills. I can send it to you. I can send it to someone else within the country, just off of my cell phone. So it acts like a debit card. And then around that, because there's no banking infrastructure, you kind of use these mom and pop stores, these small stores, as your cash in, cash out points.
Yes. See, this was important because what is the proportion of people in Kenya that did not have a bank account at the time?
So the proportion of people who didn't have bank accounts is about 3/4.
That did not have?
That did not have.
Okay.
Now, of course, people are not independent of the structure they live in. About half of households had a bank account. Okay. But that doesn't mean everybody has a bank account.
Okay.
So if you go down to people, it's about 1/4. But even then, banks were hard to access, even for people who might have signed up for an account at some point. The bank came around, I signed up, do I actually use it is another question.
And what do you mean about hard to use? Can you give us some...
So, for example, the average bank branch in 2007 was about 10 kilometers from someone. Imagine and they're not rich, right? So they're not driving, they're not taking a bus, they're not taking a bike, they're walking. So if you had to walk to the bank 10 kilometers one way, how many times are you going to the bank, Roberto?
Yes.
Never.
They never.
Yes.
Yeah,
so that's what I mean by hard to access, is that when the banking infrastructure is so far from you, you're only going to use it for very few limited things. It isn't a part of our financial lives like banks are in the U.S. or have been in the U.S. traditionally.
Was this embraced by the population? Was this easily acceptable?
Yeah, I mean, so if you talk to smartphone or app developers in the U.S., they'll say if you get a 30% take-up rate of an app in 10 years, this is the most successful smartphone app they've ever seen. M-PESA was at, within 10 years, 90% penetration.
Okay.
So it is faster than anything we've ever seen in the world,
so
pretty much.
Uber doesn't have that level of acceptance. No, not even close.
No. So in this part of the world, I always say, there's this great quote by a development economist says that the challenge of development is to move from the informal to the formal. But the informal is a huge part of their lives. And so it's not like M-PESA suddenly came and created an informal network.
Okay.
It's those networks were there, and it's going to come in and layer over the top and just make it cheaper, quicker, more efficient, safer. Okay.
Yes, safe.
So if I wanted to send you money before, I would either travel to your house to give it to you myself. So in our first round of data that we collected on M-PESA, the average transaction traveled 200 kilometers. That's a $5 bus ride in Kenya.
Wow.
Right. So if you call me and say, "Oh, Tavneet, my kid's sick. I need some Tylenol," I'm like, "Sorry, I'm not spending $5 to get you 25 cents for Tylenol." Right?
Exactly.
It doesn't make sense.
It's actually $5 each way.
Exactly.
Sorry, mine.
Yeah. So either I would travel myself, I would give it to a bus driver who was kind of doing the route between our two towns. I have a friend who's headed up there because her sister lives near you, and she'll drop it off. So think of every informal way of moving money around that we can think of. And that was the counterfactual for them. And then the phones come on and you realize, okay, now I don't have to wait for my friend to travel where Roberto is because she's not going till next weekend. And his kid is sick and needs help, right? So the money gets there immediately. It's really cheap. The transaction fee was kind of, depending on the size, about 30 cents.
Okay.
Right? Which is reasonable.
It's very reasonable, yeah.
And then I know it's not going to get lost. I know it's not going to get stolen. All of these things. Digitization. We're making everything digital. We're taking people out of the equations of transactions. Not out of the equations of the world, just out of the equations of transactions. We're taking cash out. We're taking physical things out of transactions. I like to say the products that seem to succeed or the technologies that seem to succeed take the informal very seriously, because that is the basis of most people's transaction systems, networks, values, and culture, right? And if you take that seriously and provide value to that, then you won't have a problem.
That is very interesting. That also implies that the solution for one country might not work for the another one. I mean,
Absolutely.
So this is one size fit all doesn't work.
Of course
not.
not.
I mean, we have known that from macro development.
Yeah.
But it's good that also in the micro development we have the same.
Yeah, so like all our work on M-PESA that we did in Kenya, we're replicating now in Tanzania, in Uganda. You know, we tried to replicate in Pakistan. It turns out take-up has been zero. Okay, not zero, but very low.
Very low, yeah.
At which point you're like, well, that's not happening, right? So
Exactly.
at some point you realize, okay, that system hasn't figured out how to get value to people. And so, of course, much as we're trying to replicate in Pakistan, it's not going to replicate because there's no take-up.
Again, I see.
So, of course, you're not going to find the effects because
There's
the
no
technology
take-up,
is not being used. But in Tanzania and in Uganda, we're replicating. And the idea is to try and understand, like, where is it working? Then you start to be able to ask the questions, why is it working in some places and why not? What's the value it's providing in some places and not that? You know, if we just study one aspect of the working one, we don't get the other half of the story.
Yeah,
and
you have the wrong story, no?
Absolutely.
You will have the wrong story.
Absolutely. Even the work we're doing on digital credit with overlays on M-PESA, we're doing it in Kenya, but we're going to replicate probably in Uganda and Tanzania. And the idea is to try and build a more nuanced picture of these technologies, not that they're universally good, but understand what are the constraints and where do they add value and where they don't and why they don't succeed. I feel like I'm very lucky in the world. I'm a professor at MIT and I grew up in Nairobi. Things that don't naturally add up to each other, right? And I was lucky.
Tavneet, you're clearly super passionate about development. I mean, you work in all the countries in Africa.
Not all, only a few, don't worry.
But anyway, so it feels like all of them. So you run different type of experiments, different type of policies, technology adoption, to mobile payments, to networks, and to universal basic income. I mean, so you're clearly very passionate. So what is your drive? What makes you be so passionate about this? And second, how other people could develop that passion or how they could see themselves in you in this process?
So for me, it's very personal. I'm Kenyan. I was born and raised in Nairobi. I think I always felt like that would be part of my life, and it is. I also think that in some sense, much as we think it's a much studied part of the world, it's not.
I agree.
Right? It's, you know, if you think of sub-Saharan Africa, we're close to 1 billion people, close. You know, that's India or China, and yet there's not a lot of discussion. And it gets treated as very homogeneous. I feel like, you know, you owe something back to the world. It's an opportunity that people would give an arm and a leg for. And so use that opportunity properly.